The new issue of sovereign gold bond is here. Now, SGBs are a great way to invest in gold. You not only benefit from the rise in gold prices, but also get a 2.5% interest payout every year. And you don't have to pay any tax on gains you make when SGBs mature. But there is a way to get SGBs at a discounted price. After the issue is over, RBI lists sovereign gold bonds on stock exchanges. Now, many times these old issues trade at a discount. If you are lucky, you can get a discount of 1 to 6%. But before you rush to buy these old bonds, there are a few things that you need to understand. And that's what we will talk about today. Hello and welcome to the ET Money channel. But before we begin, a quick reminder. Please subscribe to our channel and do click on the bell icon so you never miss a video from us. Now this video is divided into three sections. First, we'll have a quick introduction to SGBs. Second, we will discuss buying and selling SGBs on stock exchanges in detail and its pros and cons. In the third part, we will compare older and new issues to help you pick the right one. So let's start with a quick introduction to sovereign gold bonds. Sovereign gold bonds were introduced by the government in 2015. Although the returns of these bonds are pegged to gold prices, there is no actual gold backing them. Yes, you heard it right. There is no underlying gold in the case of sovereign gold bonds. It's a bond that is pegged to gold prices and has a sovereign guarantee. So, at maturity, the redemption happens as per the prevailing gold prices. For example, you invest today at 5,900 per gram. After 8 years, the bond matures. At that time, the gold price is 12,000 per gram. The government will pay you 12,000 for 1 unit of SGB on maturity. Now from time to time, the government comes with SGBs issues and one can invest in SGBs online or offline during such occasions through banks, designated post offices and the Stock Holding Corporation of India. Now SGBs have 8-year tenure, but that doesn't mean you have to hold on to SGBs for 8 years. You can redeem them after 5 years as well. The RBI announces the early redemption windows from time to time. Now the key features of SGBs are summarized on your screen. So if you want to invest in SGBs, the first way is straightforward. Wait for the next SGB issue and buy it through your bank. If you buy it online, there is a discount of 50 rupees per unit too. But there is another way. You can buy them from the secondary market or stock exchange. Of course, to do that, you will need to have a demat cum trading account. You don't need those if you are investing in SGBs at the time of a new issue. But if you want to, you can get your SGBs dematted. So now let's take a look at the pros and cons of buying SGBs on the stock market. SGB issues are listed on stock exchanges. So if you have a demat and a trading account, you can buy them. Currently 64 SGB issues are listed on the stock exchange. From their symbol, you can figure out when the SGB issue is due for maturity. For instance, if the symbol is SGB OCT 25-4, it is due to mature in October 2025 and it was 4th SGB series of the year when it was launched. These SGB issues often trade at a discount to the prevailing gold price. For instance, the spot price of 1 gram of 24 karat gold as per the Indian Bullion and Jewelers Association on 31st August 2023 was 5,948. The discount on SGBs with respect to this price was as high as 1.71%. So technically speaking, one can buy the SGB cheaper on the stock exchange as compared to the prevailing gold prices. Now, if the prevailing discounts are not very tempting to you, wait. In the past, these discounts have been rather attractive. For instance, when the previous SGB issue came in March 2023 at 5,561, quite a few SGBs traded at a discount, which was as high as about 6%. We saw a similar discount of 6% in December 2022. When the government issued a new tranche of SGBs at 5,409. So does it mean that you should avoid investing in SGBs when a new issue comes and instead invest in them through secondary market when the discounts are high? Well, not really. There's a problem that you will face. See, many SGBs traded on stock exchanges have thin volumes, so it's difficult to get your trades through. You may try to buy SGB units, but there may not be enough sellers available. In fact, there are some SGB issues where zero trades happen as there are no sellers at all. Now when we check the volumes, we saw that the maximum volume is over 1 crore or 1963 SGB units. There are quite a few SGBs that didn't trade on the day. Just one unit of SGB November 26, SGB October 25 and SGB June 27 were traded. And it's not that the volumes were thin on this particular day. We checked the volumes for several months and observed this trend. So what does this mean? If you want to buy SGBs on the secondary market, you will need to trade those that have ample volume. There is no surety that the SGB which has high volume on one day will have high volume on another day as well. So once you buy them, you may not be able to sell them on exchanges in the future. Now the best way to buy is to look at the bids and offer section and try to match them to get your order through. When you check the offer section, you will see the prices that sellers are asking for. For instance, if you're trying to buy an SGB at 5,850 and you're not able to do so, you can check your broking account or the exchange's website for the available offers. If the offer is for say 5,900, you can quote that price and get your trade executed. You will pay 50 rupees more, but at least the trade will get executed. This is a practical problem while buying and selling SGBs on stock exchanges. On the table, you can see the most liquid SGBs at a discount currently. Now there is another factor that you must keep in mind before you buy on the stock exchange. SGBs also pay an yearly interest of 2.5%. When you buy them on the exchange, what happens to it? So let's see. When you buy SGBs from the stock exchange, you are still entitled to the interest. However, this interest is calculated on the original issue price. So your effective yield is less when you buy an SGB from the exchange. Let's take the example of someone who bought the SGB May 26 from the stock exchange. The issue price was 3,064. You pay rupees 5,900. So in effect, the interest rate you will receive on these bonds will be 1.3% and not 2.5%. So as compared to the new SGB issue, your interest yield is less when you buy an SGB from the exchange. Okay, so what should you do? Should you buy an SGB when a new issue arrives or you should buy it from the stock exchange? The answer will depend both on where you can make better returns and which method suits you. So let's see. Okay, so should you invest in SGBs at the time of a new issue or should you buy them from the secondary market? Let's first see which is the more lucrative option. Now the average discount on the current SGBs is around 1% to the prevailing gold prices. Let's say the new SGB issue is the same as the prevailing gold price, which is 5,948. If you invest in such an SGB and hold it for the next 8 years, you will make about 7.59% returns on your investments, assuming that gold gives 6% returns every year. Now, if you buy the same SGB on the stock exchange at various tenures, but at a discount of about 1%, your total returns will range from 7.6% to 7.68%. So you could make slightly higher returns when you buy on the stock exchanges instead of the new issue. It has also been noticed that the discount in the secondary market can be quite steep at times. For example, in April 2023, SGBs were trading at a discount of 8 to 9% from the prevailing gold prices. It is all about the market mood on the day you decide to buy. So what if you could get an SGB at about 8% discount? How much returns will you make then? The total returns now range from 7.72% to 7.81%. Still, with respect to the original return of 7.59%, it is not a very significant increase. So mathematically speaking, the benefits of buying SGBs on the exchange are rather limited. Do note that we have not taken into account the brokerage here, which you may have to pay when you buy SGBs in the secondary market. Brokerage is a cost and hence it will pull down your returns. Plus, buying and selling SGBs on stock exchanges will entail taxes as well. This will wipe off the extra returns you will make by investing in SGBs through the secondary market. All in all, it's advisable to see SGBs as a long-term investment option and hold them till maturity. If you plan to trade in SGBs, you may not end up making any gains. So if you have a demat account, you can buy them on the exchange. If you are lucky and get a steep discount, you can earn slightly higher returns. But keep in mind that buying on stock exchange involves brokerage as well. So that will be an additional cost. Those who don't want to get into the hassles of operating a demat account can subscribe to SGBs at the time of the issue. The pros and cons of investing in SGBs at the time of a new issue and through the stock markets are summarized in the table on your screen. And with this, we have come to the end of this video. We really hope you liked it, and if you did, Please share it with your friends and family and colleagues. And I'll see you soon with another insightful video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.